Let's talk about some of the drawbacks with overfunded whole life insurance. Some of you right now are watching and you're like, everything. Now, if you're someone that said everything, the reason why is you probably came from watching Dave Ramsey, which I completely understand. One of the main drawbacks to whole life insurance is it's being compared to an investment. Now, it becomes very challenging when you start comparing life insurance to an investment because life insurance is not an investment. It's like comparing a hammer to a saw. They both do two completely different things, but both can be very powerful vehicles if they're used in the right context. When you start talking about a saw like a hammer, you quickly understand that is not a very good tool. That's why it becomes very challenging because Dave Ramsey talks about life insurance like it's an investment. Life insurance is meant to be an and vehicle, not an or. So an or asset is you put your dollars in a bank account, or you put it in real estate, you put it into the market, or you put it into life insurance. That's what or is in general, right? You can only put it into one place. But life insurance, when set up properly, is used as an and asset. You store it in life insurance and you borrow against it, then go store into something like an investment. So that's the first drawback, is treating it like an investment and also comparing it to an investment. Second downside for whole life insurance is when it's designed not in a way that's beneficial to you. There are multiple ways to design whole life insurance, and you can design it to optimize it for cash or optimize it for death benefit, or right in the middle. Comes down to what it is that you find of value. If you want it for cash value but gets designed for death benefit, well, then that's a problem. That is a major drawback, because once you get these policies set in force, they're really almost impossible to change. There are ways to do what's called 1035s, which is essentially rolling in cash value from one policy to another, just like in real estate with a 1031. But if there's no cash value, then you can't do a 1035. So getting them set up properly for what it is you want is super important. So if it's set up improperly, that's a massive drawback. Another drawback is you don't have dollar for dollar access in your cash value compared to something like a bank account. So what I mean by that is if you put $100,000 into a policy, you may only get 80 to 90% accessibility within the first year. Versus if I kept that $100,000 in my bank account, well, then I would have access to the full 100 grand. Very important that we look at life insurance as a long-term vehicle and not a short-term vehicle. If we look at it as short-term performance, it's not going to outperform even a savings account. But when it's set up properly and looked at it from a long-term perspective, you'll be able to have way more value than you did in a savings account. The reason is because it's a multi-dimensional asset. It does multiple things. It allows your dollars to do two things at once. It has a death benefit. You can borrow against it. Your dollars will compound. There's tax advantages. The list goes on, and we're starting to compare it to something like a savings account. I don't even like to compare it to a savings account because in reality, it's not. It may allow you to save more money, but in reality, life insurance has its own characteristics that you can't compare to investment or a savings account. But there will be a point in time when you will have more cash value than you contributed to it. And when that happens, then there really is no argument for, is it better to have stored my money in a bank account or is it better to have stored it into a policy? At that point, you now have all the advantages, plus you have more cash than if you would have just set aside. And when you design it the way we do, that happens a lot earlier than if you design it the typical insurance way. The last drawback is if you are unhealthy. The reason why that's a drawback is because you need to be healthy to qualify for it. The insurance companies are going to do their due diligence to see how healthy of an individual you are, because they want to make sure that you're not going to die tomorrow. So if you have cancer, heart issues, something that's underlying that the insurance company would deem as risky for their book of business, well, then you can't get that insurance policy on yourself. Now, there are other ways that we can get around that, where we can get insurance policies on your spouse, your kids, business partners, someone that you have an insurable interest with in their life, which essentially means that they die and pass away, you will be affected financially. Overall, there are tons of benefits when it comes to whole life insurance, and there are a few drawbacks as well. Another drawback is this is not for everybody. It's super important that you understand what is your wants, your goals, and if this product fits what it is that you're trying to accomplish. If you are someone that doesn't have cash flow, has high interest credit card debt, and is living paycheck to paycheck, then this is something that is not for you. I think it's important that we look at both sides, the drawbacks and also the pros when it comes to whole life insurance.